In business today, three things to know. First, investors pile into bonds. As nervousness about global equities increases, the bond market rallies. What this means for interest rates and for the U.S. bull market. Then, fast food workers fried. Protesters in 30 countries demand higher pay at the world's largest fast food restaurants, and why some U.S. conservatives now agree with them. And hooray for Nollywood, why Nigeria credits its film industry with turning the country into Africa's largest economy. Arise Exchange starts now. Hello, everyone. I'm Andrew Schmertz. U.S. stocks tumbled Thursday amid lousy economic news and earnings. A deluge of data helped push the markets lower. Inflation continues to creep up. The Consumer Price Index, which measures the cost of goods at the point that you and I buy them, rose 0.3%. That's the largest increase in 10 months. Confidence among home builders fell in April. The index by the National Association of Home Builders came in at 45. Anything below 50 is considered a negative outlook. And industrial production also fell, down 0.6%. Analysts had expected a gain. So all the bad news seemed to offset the good. Weekly jobless claims fell 24,000 to 297,000. All those numbers contribute to a slide on the big board. So here are the final numbers on Wall Street. Dow Jones Industrial Average dropped. It was down better than 200 points at one point today, down 166 to 16,447. The S&P 500 sliding 1% to 1870, and the Nasdaq off by 0.75% to 4069.23. Stocks we're watching today. Walmart, reporting a disappointing quarter, and like other retailers in the U.S., saying the weather is to blame. The retailer earned $3.6 billion, or $1.10 a share. That was down from $3.8 billion, or $1.14 a share a year ago. Walmart closing at $76.83. At one time, was the nation's largest retailer and biggest employer, and now Sears is on a serious downward spiral. The company says it is considering selling 51% of its stake in Sears Canada, which operates nearly 20% of the company's stores worldwide. Sears pulling back $1.37. And T-Mobile and Spanish-language entertainment giant Univision is teaming up with T-Mobile to create a wireless service targeting the Hispanic market. T-Mobile closing at $33.26. And look at commodities. Gold down 9.10. Oil down 86 cents. Many of us focus on the equity markets, but it's the bond market that has become the real surprise this year. As global economies remain sluggish, investors have been diving right into bonds, specifically U.S., German, and British government bonds, which have rallied, and that has driven down interest rates. For example, the yield on the 10-year U.S. Treasury dipped to a 6-month low. It is a sign the market believes that the world's economies are simply not improving as quickly as expected and that interest rates will remain low. Zane Brown is fixed income strategist and partner at Lord Abbett. Zane, welcome back to Arise Exchange.
Great to be here. Thank you.
You know, the Wall Street Journal put this on the front page today like they were surprised by it. What is the push into bonds all of a sudden?
We love bad news, right? If the economies are going to go into recession, that's just a glorious environment for high-quality bonds. And, of course, when you have German yields that are 1% and more below our yields, why not go into the United States 10-year and at least maintain your high quality? So I think it was the economic slowdown globally that caused this rally.
Is it too late to get into the bond market, though?
I think so, at least in high quality. I really think that this is an overreaction. And then when you look at the U.S., the underlying theme in the U.S. is probably that we're a lot stronger than what today's numbers indicated.
Well, you and I have talked about the lower quality bonds before, but when we talk about the high quality bonds, basically we're talking about sovereign bonds, correct?
Right, yes.
And you think that these are now overbought?
I think they're overbought, and buying the 10-year Treasury at something that yields less than 2.5% is probably the wrong thing to do. And we talked earlier and at a previous time about high-quality bonds. I think those still represent value. They'll do well when the economy shows greater evidence of being a little bit stronger.
So what are people jumping into the bond market now? They're not doing so for the interest rates, are they?
Well, I think they're doing it to hide. They're hiding from what they fear will be poorer performing equities. And when you get a slowdown in Europe, the fear of a property implosion and a slowdown in China, they just say, get me out of here, put me into something that looks like it's going to be safe. And I fear that what looks like safety in terms of high-quality U.S. Treasuries may indeed be what gives you negative returns over the balance of the year.
That's interesting, sort of a contrarian position then.
Perhaps, yes.
But if you look at the equities and you think if the equities are overbought, then do you want to be in bonds?
Well, if you believe that, then absolutely you do want to be in bonds.
And that changes day to day based on who you speak with.
Yes, that is true. Yeah. You want to avoid the loss that you fear might be associated with equities, and that would be a good reason to hide in bonds. I'm just concerned that a little bit of economic growth could change feelings, and then you'd end up losing money in the bonds.
If you are one who earn your living from fixed income, you have just suffered over the past several years, haven't you?
Well, unless you've been in high quality. Unless you've been high quality this year and high yield all the way along, because of its higher coupon, it's kind of masked some of the losses that you might have seen otherwise.
Okay, let's talk about the U.S. economy. We continue to get mixed economic data, but it seems like the last couple of weeks that economic data has been sliding in the wrong direction.
Well, certainly the headline figures. The headline figures today, industrial production, that really looked ugly.
Yep.
But if you looked at it year over year, it was 2.9% versus 3.1. I think we've just had a correction this last month from really great strength the previous 2 months. So I'm not sure it's as bad as the headline numbers
But
look.
we better see some decent comps this quarter, shouldn't we? If everyone is going to blame the weather
That's
last
true.
quarter,
That is
and we can't
absolutely
pull
true.
ourselves out of it this quarter, then we have some concerns.
That is absolutely true. On a company-by-company basis, you've got to have better comps. On an economic basis, the employment so far this year, even if you take into consideration ugly January and February, we've got 214,000 per month so far this year, even with bad weather. That compares to 192 last year. That's qualitatively better. So it suggests some underlying strength.
Where do you think inflation is going right now? We're starting to get reports that there's inflation in there. There's a whole bunch of people who said that inflation has been here for some time.
Yeah.
And now it's creeping into the
Well, the Fed
numbers.
is hoping that we get more inflation.
They want some. About
And
2%
we
or
certainly
so?
did get, they'd love to see 2%. And that, of course, would push yields higher, and that would cause a problem on those high-quality bonds that we talked about earlier that might be at risk. But I think that we're not likely to get a great deal of inflation. Certainly the worst kind of inflation is wage inflation.
And we haven't seen wage pressure, have we?
have so many people unemployed
Yeah.
and willing to be employed. It doesn't look like it's going to happen anytime soon.
Okay, Zane Brown, fixed income strategist with Lord Abbott. Thank you so much.
All right, great to be here.
Talk to you soon. Is the United States about to create a two-lane highway for the internet? One, a fast lane for those willing to pay for higher broadband speed, and another, the slow lane. The fight is over something called net neutrality. And on Thursday, the Federal Communications Commission proposed a plan that, in effect, would end net neutrality, and that could cost small businesses and consumers alike. Our Washington Bureau Chief James Blue is in D.C. right now with the late-day development. James, what did the FCC do today?
Well, they voted 3-2, 3 Democrats for it, 2 Republican commissioners against it, basically to propose the rule and to invite public comment. And the idea is to, on the face of it, to give every consumer access to the internet equally. That's sort of the neutral part of it. But what it would also do, as you mentioned in the lead-in, would allow companies to pay these large internet providers for fast expressway service to the customers that they deliver broadband services to. And the real fear is that, quote-unquote, net neutrality would create a multi-tiered system where people would get internet and broadband services based on what they would be willing to pay.
James, is Congress going to step in here? Because this is a little bit of a reversal for the FCC. You said this was along party lines in the FCC, but there are many Democrats in the Senate certainly pushing back because they have friends in Silicon Valley.
Yeah, I think the real challenge, and this is what the Republicans voting no said, this is not the purview of regulators, but really the purview of legislators, suggesting that Congress should take this up. But I want to remind you and our viewers, many years ago, there was a big effort on internet piracy and to change the rules on that. And Silicon Valley and Hollywood came down like a sledgehammer on Washington. And there's a real likelihood that a similar effort of the big, large internet companies and this sort of new Silicon Valley economy are going to react to net neutrality in many similar ways.
Okay, James Blue in Washington, D.C., thank you.
Thank you.
Coming up, do you want some fries with those protests? Workers demand higher pay at McDonald's, Burger King, and more, and why they have some surprising allies. You're watching Arise Exchange.
I don't think that television news in the United States reflects the diversity of the world. I don't think it does a great job of even reflecting the diversity of the United States.
When you are watching TV, you don't really see a lot of different cultures. There are plenty of other places that people might not even know about.
We are living in a global culture, and you cannot hide news that is happening when there's so much social media.
Arise News, every culture, every angle.
Welcome back to Arise Exchange this Thursday. Labor organizations are turning up the heat on fast food chains. Workers today walked off their jobs at restaurants such as McDonald's, Burger King, Wendy's, and Kentucky Fried Chicken in more than 30 countries in a united call to raise pay to $15 an hour. That's significantly higher than the minimum wage. Joining us to talk more about the fast food strikes and what it all means is Paul Sonn. He is general counsel for the National Employment Law Project, a nonprofit that promotes policies and programs that help build economic security and opportunity for workers. Paul, welcome to Arise Exchange.
Thanks.
First, let's get your perspective. Where do you stand on the idea of higher pay for fast food workers?
Yeah, we think it's really the direction the industry needs to transition to. It's it's a $200 billion multinational industry that's really built on a poverty wage HR model. And these are no longer short-term stepping stone jobs for teens. The median age is 28. This is where the bulk of job growth in our economy has been since for the last 4 years, in these low-paying jobs. Half of college grads work in low-paying jobs. And we need to find a way to make them family-sustaining. It's holding back, not just hurting families, but the economy.
But I hate to say this. Should they be family-sustaining jobs? I mean, as you mentioned, they used to be short-term jobs, summer jobs. What has changed to make them permanent jobs? And while paying them more sounds good in the short term, but doesn't it hurt in the long term by keeping them there?
Yeah, so these low-wage service jobs used to be at the periphery. They've now moved to the core of the economy in restaurants, retail, home health care. They're now where a huge segment of job growth is concentrated. It's where tens of millions of working adults are spending their careers. And it's holding back our economy, which needs a consumer class that can afford to spend to drive sales and growth, as your last guest was noting. And one reaction is raising the minimum wage, which is becoming more central to our economy than ever before because the low-wage jobs are where the growth is. But another solution is having these key growth industries look to transition to a higher wage model. And there are well-known firms out there doing it. And I think the expansion of these strikes globally really illustrates what's possible. It's key where we're not seeing the strikes. We're not seeing them in countries like Australia that have transitioned the industry up to a $16 plus minimum wage. Just last 2 weeks ago, the city of Seattle brokered a deal with business community support for a $15 minimum wage. And that's what the strikers are calling on the industry to sit down and figure out a workable plan to do the same industry-wide.
So the argument on one side is that by raising this, you're actually going to cost jobs. Yep. Is there a tipping point then, a number where that in fact will take place? And how do you communicate to the franchisee owners, because most people may not know it, but McDonald's is really owned by some guy on the street, that they're not going to cost jobs in business?
Yeah, well, the key thing, the research on the minimum wage generally has been really trending towards a view that the job loss effects are somewhere between minimal and negligible. And we know there's a route for transitioning industries because we've seen it in hotels, we've seen it in janitors, we've seen it in hotel workers in cities like New York, where they used to make $8-9 an hour and now get 15 plus an hour through a combination of wage floors and unionization. And there's this profitable multi-billion-dollar industry can follow the same map. The formula is there's some efficiency savings from higher wages. There really need to, in one way or another, be trimmed profit margins. And finally, there are small price adjustments.
Do you get the sense that companies such as McDonald's and Burger King are probably going to relent, that the momentum here has gained so strong that from a PR standpoint alone, they're going to change the policy?
If this keeps trending the way it is, it's hard to see how they won't be able to. And in fact, I think we're going to see the high-cost cities moving like Seattle. There's a call for a $15 minimum wage in New York, Chicago, right. LA for hotels. I really think this is here to stay, and the industry is going to find a way to adjust.
Finally, there's a couple conservatives, former presidential candidate Mitt Romney, Rick Santorum, surprisingly, who are coming out pushing for a raise in the minimum wage. And we have actually a graph that shows that about 4 states have raised the minimum wage alone this year, including the District of Columbia. Why are some conservatives getting behind it?
Well, I think what's striking is why it's so few of them. Historically, raising the minimum wage has been a bipartisan issue. It was like that in the 90s, even in 2007, the last increase. But through the role of money in politics, polarization, they're actually the Republicans are blocking something that their voting base wants, the majority of Americans want. And I think, but more and more individuals, Romney, Santorum, Haley Barbour, coming out and saying this is political insanity, it's bad for our economy, it's not where we need to go in the future. And it's changing every day. Today, Walmart announced they don't oppose the minimum wage increase. Subway came out in favor last week. It's a very fluid environment.
And the momentum seems to be heading in that direction.
It really does.
Paul Sonn, thank you so much.
Great, thank you.
Time now for our business ticker stories making news around the world. The recalls keep coming. GM has announced an additional 3 million recalls worldwide, including 2.7 here in the United States. This means that General Motors has now recalled more than 11 million cars since January, setting it on track to break its recall record set in 2004. GM saying the vehicles that have been recalled have problems with brake lights, headlamps, power brakes, and windshield wipers. The NASDAQ is launching a new tool to monitor its staff's currency trading habits, which have come under increased scrutiny in light of manipulated market rates. The software, called Schmertz FX Trade Surveillance, will allow banks to easily monitor for any strange trading patterns. The new technology is expected to cause a bit of a stir in an already big week for the NASDAQ. Just this Monday, the exchange appointed Adina Friedman, a former employee, as its new president. You'll recall that last night we told you about missing radio legend Casey Kasem. Well, a long-distance dedication because he has reportedly been found. Authorities in Washington say they found Kasem with his wife, Jean, reportedly visiting friends. After concluding that he was receiving appropriate medical care, local officials left Kasem with his wife. Authorities did not release his exact location to the public or even to his daughter, even though he is technically in her custody. And this is what the most expensive home in the world looks like. The 27-story home belongs to the wealthiest man in India, Mukesh Ambani. The skyscraper's renovations cost an estimated $1 to $2 billion. That's a home improvement project, isn't it? The 400,000 square foot home, called Antilla, because you need a name for a home if it looks like that, is after a mythical Atlantic island and has 6 stories of underground parking, 3 helicopter pads, and is rumored to require 600 staff members to keep things running. That's one billionaire who has created jobs, certainly, right at home. Nigeria's booming film industry, or Nollywood, has directors and film lovers everywhere taking notice. More so with the release of its latest project, Half a Yellow Sun. With an all-star cast and a budget of $10 million, it is one of the most expensive films to come from the region. Here to weigh in on the business of Nollywood, Whitehead fellow at the Foreign Policy Association and guest writer at the Financial Times, Jake Bright. Jake, welcome back to Rise Exchange.
Great to be back.
It's good to have you talking about something a little bit more of a lighter note. I will say this, when I was in Nigeria and they rebased the GDP, they mentioned Nollywood as a key driver of that increase in their gross domestic product. How big is Nollywood to their economy?
Well, the number that they gave was 1.4% of the rebased GDP. And really what that meant was the rebasing was just capturing economic activity that was already out there.
Sure, for the past 20 years
so what it did is it elevated, with this GDP headline and biggest economy in Africa headline, in all those headlines was also a sideline on Nollywood. So it elevated Nollywood across global headlines.
Where does Nollywood fit into Hollywood and Bollywood?
Well, that's what I tried to dig into, is to try to do a story for FT This Is Africa on how do you look at Nollywood as a business industry. And what you find is that Nollywood, and this is a recurring theme in all the research, I spent several months talking to a lot of people, it has scale, it has volume, it has demand, but when it comes to quantifying Nollywood revenues and distribution, it has massive, massive challenges. So on scale, demand, production, it's second to only Bollywood. It's ahead of Hollywood. But when you get into numbers dealing with revenues and distribution channels, it's an industry that's bleeding revenue away from the originators, and that's why there's some limitations in quality.
What do you mean by bleeding revenue?
In that Nollywood films make a lot of money, but very little of it
Trickles down.
formally goes back to the people who actually produce them.
That's interesting. You know, and what about creative freedom? For example, the new movie that is out, Half a Yellow Sun, getting a lot of buzz, but not yet released in Nigeria. Tell us about the movie and about creative freedom.
Well, the movie is, you know, I went to the premiere at Lincoln Center, and I spoke to the director and the person who put the financing together.
We're watching a clip of it right now, by the way.
Yeah, and they were a little ambivalent as to whether it was a Nollywood film itself. What the financier told me was, if you consider being made in Nigeria Nollywood, then it was. I think 30 plus of the 20 or 30 of the shooting days were there. But she said if being Nollywood is low production quality, low budget, not for a global audience, then we're not.
How much do the Hollywood studios back Nollywood movies, or not at all, or are they getting involved?
Well, that's an interesting question. I found that there's almost no connection at all. And I found a producer, a Nigerian gentleman, Toyin Dawudu, who's one of the few producers who had produced films, Nollywood films, both in Nigeria, and tried to take it to Hollywood. And the central challenge he had was, it's very hard to quantify Nollywood, or even there's a lot of still, you know, people aren't completely confident in the numbers that came out. So he said trying to get investors to invest in Nollywood when you can't quantify how they're going to get their revenues back is nearly impossible.
You mentioned the low quality. This movie has a $10 million budget, which is at the high end of budgets in Hollywood, but really equivalent to a 30-second commercial in the United States. So the question is, you know, what kind of money needs to be pumped into this industry, and what kind of talent needs to be brought into it to raise it to a level where people will start seeing these movies outside of Nigeria?
Well, most people will go back to, and I spoke to many people, including some of Nigeria's new tech entrepreneurs, who are trying to create digital platforms to solve the revenue problem. They say that most of the problem is just getting revenue, licensing things, and that if people could see that they could do that, the demand is there, and that the money would come after that.
And do they have theaters throughout Nigeria, enough of them to see movies?
Well, that's the other challenge, is that Nigeria doesn't have much of a theater structure, and then you start to connect to other challenges in Nigeria like power, where that limits the ability to have kind of a premier ticket selling structure.
Okay. Jake Bright, thank you so much.
Thanks a lot.
Ahead, kicking them while they're down, why a top Turkish official is our favorite person of the day. You're watching Arise Exchange.
I think news does make people put things in black and white terms, just so that they have a dividing line between what their viewers like and dislike.
When they see a person of color, they either think that they're not gonna do anything, they're either on drugs or they got pregnant at an early age, and I just want to say that that's not true.
It tends to reflect more the interests of the upper income people and the upper income interests.
Arise News, every culture, every angle.
Time now for our favorite person of the day, when we pick one person who grabbed our attention and not for the right reasons. Today, it is a top Turkish official who pulled off this classy move during protests over the mine collapse that may have killed 150 miners. Pictures emerged of Yusuf Yurkal, a key advisor to Turkey's prime minister, kicking a grieving protester during a visit to the mining town. The protester, who is a family member of one of the missing miners, was being held down by police at the time, as you can see. Witnesses say Yurkal kicked the man 3 or 4 times. It happened during a visit by Prime Minister Tayyip Erdogan, who has been blasted for his handling of the mine disaster in Soma, Turkey, that may have killed the 150 people. Erdogan was booed during the visit as protesters shouted "murderer." He had previously said, quote, "mining accidents happen all the time," and then cited statistics from the 19th century. The protests got so bad, the prime minister had to seek refuge in a local supermarket. So, for literally kicking them while they're down, Yusuf Yurkal is our favorite person of the day. Coming up next, the event planner to the stars. Our corner office is ahead here on Arise Exchange. Stay with us.
Mainstream news has covered all of the issues of the world, which are like this, through a very narrow lens. And at Arise News, we do things different. We cover every culture, every angle. Our mission is to go to these places, to these communities, whether they're in Africa, whether they're in Europe, Asia, the United States, the Caribbean. And we're going to find these stories and we're going to tell them to our audience. Stories that they probably never heard of before, and stories that they'll find interesting and engaging.
When it comes to event planners, Artie Thompson's name is at the top of the list. He made a name for himself as a master event planner for several big-name celebrities and even President Obama. Now he's one of the stars of the hit TV show on Bravo, Chef Roblet, and he joins us now to talk to us about it. Welcome to the program, Artie. Thank you so much for coming here.
Thank you.
All right, so you're considered a master event planner. How does one get to be a master event planner?
Oh my God, being in the business for 20 years. I started out a gazillion years ago with a company called Great Performances, and I started my own company called Artie's Events.
And what kind of events do you see people doing these days?
The scope has changed a little bit. People are becoming more private, so they don't want everybody to see what they're doing. And
does that mean smaller venues? Does it mean hidden away venues? Does it mean venues without the helicopter overhead that we sometimes see?
You know, well, they don't want them to be as glamorous, but they still spend the same amount of money. They just want it to be kind of neutral. They don't want people to think that they're like spending up the high heavens.
And what are the keys then to a successful event when you're dealing with a celebrity? I imagine high maintenance, a lot of demands, constant changes.
Well, the constant changes come near the end, but you know what? You have to treat them like normal people, so you have to listen to them and then give them your viewpoint, because they love that. They love to hear what you think.
And what are some of the events people are doing then? You know, is this business launches, ventures?
Product launches. I do a lot of corporate outdoor events, picnics. I do private events for CEOs that are sponsoring people. And, you know, I've done a number of events for President Barack Obama.
Tell me some about those.
Well, one was at the Studio Museum. It was a fundraiser, you know, high-level thing. The funniest thing is I was told not to walk down this hallway, and so I walked down the other hallway, and he came through there, and I told him that you're not supposed to be here. He kind of laughed and kept on going.
Right. When you work with the president, who is your point of contact? I take it you're not sitting in a room with the president and going over the color of the carpeting.
No. It was who was it? The election, I guess they're the
chief of staff, maybe.
Chief of staff, President, what is it? Barack Obama for now. That organization. So I dealt with those high ups, and they knew me because I had done so many events. So they were like, "Oh, is it Artie again?" I'm like, "Yes, it's me."
How did you ingratiate yourself and find yourself in the celebrity world? That is an interesting story.
Well, I came to New York as an actor, singer, dancer. I did cabaret for about 8 years. Then I went into production like this for about 3 years. I got drained of that. And then my life coach at the time asked me to go into catering. I thought he was crazy. And that's how I got into it. I went from performing to behind the scenes. And
so the key is a life coach.
Yeah.
I want to ask you about the bow ties.
Okay,
because you have the bow ties here on the table, and when you think about events, so you're trying to make the connection in the bow ties. So tell me about the bow ties.
Okay, so the bow ties, I always thought that men should have a variety of colors to choose from, and I thought that we were kind of stale with that.
Because the wearing of bow ties for men went out of style, if I dare say, many years ago.
It did, but it's coming back.
Okay.
And one of the reasons is because people forgot how to tie them.
I was about to ask you, do you have to tie them yourself, or
No, they come pre-tied.
Okay.
Except for that one, you can never untie that one. But most of them come pre-tied. We also offer a video to show you how to tie it on your knee, so that when you can put it around your neck. You know, the biggest problem is that people can't tie it because it's like a shoestring.
What events do you wear a bow tie at?
Galas, you wear them to birthday parties, you wear them to proms, you wear them to special events where you are the honoree.
Do people wear them to work?
Yes. Well,
I mean, you do.
I do, because I am trying to. But I feel that bow ties are great because you don't have to worry about them spilling, falling into your food. You don't have to worry about anything falling on it. It's very casual. You can unbutton the top and it kind of hangs out. You can really do a lot with bow ties. People just don't understand.
And you need to match a bow tie. We only have 10 seconds left. With the type of shirt you're wearing, is it like a regular tie?
Yeah, like for what you're wearing, I would either do something like that or this.
Okay, well, I'll try them on afterwards.
Okay, wonderful.
Right, thank you for coming.
This
was fun. Thank you. Tomorrow on Rise Exchange, why experts are saying the U.S. is a rising star in global manufacturing here at home. Let's take a quick recap of the markets. An ugly day on Wall Street. The worst performance for the Dow in 5 weeks. I'm Andrew Schmertz. Thanks for watching Arise Exchange. See you tomorrow.